Hey guys, this is Bill with NotaryCoach.com. Today I want to talk to you about the three main loan types that you're going to be working with as a mobile notary and signing agent. The first is called a conventional loan, and this is kind of your old-fashioned vanilla loan that people can get when they have excellent credit, they've got easy-to-prove income, and maybe they have a substantial down payment. On loans like this, if you have over 20% as a down payment, you can avoid having to pay private mortgage insurance. However, if you don't put quite 20% down, you'll still have to pay the private mortgage insurance premium. That just helps the lender, it helps guarantee the lender will have some recourse in the event of a default. Now, but it does not require that you put 20% down. You have some flexibility there. Now, the second type of loan that you'll encounter a lot is called an FHA loan. And those are loans that are facilitated through the Federal Housing Administration. They're backed by the government. So because they're guaranteed by the government, these lenders can offer some expanded approval guidelines. So you don't have to have quite as good a credit. Income can be a little lower than maybe in a traditional conventional mortgage. And the trade-off for that is that the borrower with an FHA loan will end up paying that private mortgage insurance premium for the entire life of that loan. Now that's a decent trade-off for a lot of people. And then to get out of the private mortgage insurance, a lot of people will refinance those FHA loans maybe a few years down the road after they've increased their income, increased the equity in the house, or maybe improved their credit a little bit. Now, the third type of loan that you're going to encounter quite a bit of is called a VA loan. And those are loans that are facilitated through the Veterans Administration. They're also guaranteed by the government, but they're reserved for veterans of the U.S. military. Now, those look a lot very, very similar to just a traditional mortgage. There's expanded approval guidelines, very little down payment usually required, decent interest rates, and there is never any private mortgage insurance, or very rarely is there private mortgage insurance required on a VA loan. In exchange for that, they usually pay what's called a VA funding fee, which is usually based on the value of their home or the contract sales price. And it can be substantial, but it can also be rolled into the mortgage as well, so it doesn't necessarily come out of their pocket. So that's the three main loan types that you're going to encounter as a mobile notary and signing agent for the mortgage industry. Hope you find that helpful. My name is Bill with NotaryCoach.com.